Hello, everybody. Happy Hump Day. It's Wednesday, and I've got a new theory as to what might be going on in the Bitcoin world. And again, remember, I'm just a guy on the internet who looks at a lot of data. That's it. What do I know? But today we're going to look at, what's going on with these ETFs. There's been 6 of the last 7 days, big bleed, $900 million out. Who is selling? What's going on? We'll look at what I believe is my theory on hedge funds and what they are up to right now. We'll look in detail at funding rates. We'll look at where we are in the post-halving run compared to previous cycles, and so much more. Oh, also talk about liquidity and Dixie rejection for those who like the Dixie. Let's go. Thank you to the mods of the chat too and everybody for being here. And this is not financial advice, of course, as you know, and shout out to everybody on Patreon. This is from Ethan Schneier, just joined Patreon. And Energy Free said, I recently joined Patreon as well. So thank you all for coming. And thank you for being part of the team. Let's look at Bitcoin monthly returns before we get into it. I'm going to mix it up a little bit today. We're down 3.8% for the month of June, which is not too bad. Yesterday was worse. It was 4.1%. But we're holding tight at this short-term hold to realized price, which is proving to be a very, very good support level. We'll get to that later into the charts. But now I'm going to mix it up. I'm going to do the Bitcoin black hole first, because this sets up what I'm talking about today. Because something funny is going on, and I like to try and figure it out. So first of all, day 110, raw numbers. We had $900 million leave the ETFs in 7 trading days. Who is unwinding? Retail is not selling here. The pension funds are not selling here. And my theory is the hedge funds are unwinding. Let's look at the macro update. You can see big dumpage out of Grayscale and Fidelity. And we know a couple of the hedge funds are in these two in a big way. This is what it looks like. It's rare we have 7 days straight of outflows. And we now 6 out of 7 days in the red. So it shows you there is a big unwind happening, but why? Why would you want to unwind when we're already kind of like the 64, 65K level, which is kind of at the floor? There must be another reason. It must be because the current trade that somebody has on is no longer proving to be as profitable, so they're reducing exposure. We'll break that down in a minute. Also, yesterday, 2,339 Bitcoin were added to the system. Again, that's reflected in the $900 million. When you add up this $900 million, back in the napkin in my small little head, it's about, 1,600 Bitcoin? No, 16,000 Bitcoin, sorry. See, I got a decimal point mixed up. About 16,000 Bitcoin were put back into the system, which is a lot. And we know miners are selling and a bunch of other stuff. We also know one of the things that confused me, I was trying to put the little pieces together, the hedge funds were buying GBTC despite the 1.5% fee. And I always thought the only people that would buy that with that high fee were people who were doing short-term speculation. And that explains why GBTC is dumping so hard. Again, over 6 of the last 7 days, big dumps. Because the people that got into this trade, got into this vehicle, were planning not to keep it for a long time, but only a matter of weeks or maybe a month or so. Then the 1.5% doesn't matter too much. And the other peculiar thing that's happening behind the scenes is Blackrock. Blackrock used to be a mirror image of Grayscale, but Blackrock is doing nothing. They are not adding or deleting any Bitcoin, which is very suspicious. Remember, yesterday, they did $1 billion in volume. If you multiply the amount of volume, say 26,000 shares were traded at an average price of, say, $37, it's basically $1 billion of volume, but no addition or deletion to their fund. So maybe, because BlackRock are clever enough to know, 64K, 65K, it's a good time to buy, but not necessarily reflect in your fund. Who knows? I don't know. I'm just guessing here, but it's extremely bizarre. Again, you do $1 billion, which is about 16,000 Bitcoin worth. Not one Bitcoin is added. And I know how market makers work, etc. We know all that, but it's very suspicious. So let's go. Let's talk about the news that's going on right now. And this will set up the theory that I'm thinking about. First of all, most funding rates are heading down. Now, funding rates, as a quick reminder, are payments made between traders to maintain their positions in perpetual swaps. It's a type of futures contract with no expiry date. And when funding rates are super positive, traders pay an interest rate to hold a leverage long position, betting the price will go up. Hedge funds sell these to pocket the premium. And when funding rates tank, hedge funds no longer see it as lucrative. They unwind. At least that is my theory. Again, could be wrong, just a guy on the internet. Let's look at some of the deltas of where we are right now. This is the exchange long and short ratio chart. You can see here, full percentage point on the short side. So right now, there's slightly more people short than long. This means that there is exposure. So if price goes up, the shorts have to cover or get wrecked. And when they see this happening, they take risk off the table, especially when the price has gone from, say, 71,000 down to 64,000. I know it looks like a kind of a floor from here. Therefore, you take risk off the table. And another view of the world, this is the open interest is dropping across the board. It seems like the hedge fund managers are having a rough time maybe now, or they just want to unwind their positions. And maybe they're a little bit nervous if something happens where the price goes up, they are exposed. And they've made their money on this carry trade so far. So maybe they are just, again, slowly unwinding these positions, is what I see. Another view, the funding rates are also dropping. They are turning negative, and therefore the Bitcoin cash and carry trade that we've spoken about a lot over the last few months is that ARB strategy that helps stabilize and deepen the market. But right now, it looks like the liquidity and volume to the market is remaining stable, but the funding rates are dropping, and so is the need for these vehicles. Now, I'm going to explain this further with some charts, but before I do that, Bitcoin Only playlist will be here after. Let's talk about the charts and how they support this thesis right now. So first of all, this is the global crypto hedge fund beta. And you can see here, it appears that hedge funds definitely are unwinding their carry trade, and explains the ETF sell-off the last 7 days. And funding has basically gone to zero and negative in spots in some places. And crypto hedge funds have really perhaps thrown in the towel on Bitcoin right now. They have reduced their Bitcoin market exposure to only 0.37 over the past 10 or so trading days. And this is the lowest since October 2020. So they went from being kind of all in gung-ho to going way back to 2020, which is interesting to see. And I'll explain towards the end why this is actually good news. It's not actually bad news. And here, this is the list of the hedge funds. Just pointing out one in particular, it's Millennium Management, number 3 here. These are the top 25 hedge funds on the planet. These funds, they don't play with Bitcoin to buy and hold. They play to speculate. They play for the carry trade. And you can see here that Millennium Management, back then when the price was lower, had nearly 30,000 Bitcoin. That's $2 billion today. And right now, they've milked it for the first Q1, part of Q2. Now they are probably unwinding part of it or a lot of it. And in fact, if you take half of just Millennium, that's exactly $900 million approximately what was dumped out of the ETFs in the last 6 to 7 days. Again, the retail investors, they're not dumping here. There is some long-term holders taking some lifestyle chips off the table. And the pension funds do not dabble in Bitcoin. They get in and they hold, I believe. So let's look at another chart too. This is how the funding rates did turn negative. This is from Andrei Dragos. And very, very briefly, in that little red box in the bottom right-hand corner, the Bitcoin perpetual funding rate did turn negative, but only very briefly yesterday or the day before. They're back up, but they're real close. Now, why do we care? This is kind of the interesting part. And I know this chart isn't exactly maybe totally bright, but I do want to share some of the history of why we look at Bitcoin funding rates. Because when they turn negative, what typically happens afterwards to Bitcoin price is why we care. So I added green arrows to this chart And this is the Bitcoin daily from Coin Analyze funding rates. When it's red below the line, that means funding rates are negative. And there's 3 big sections where this happened. And we are now hopefully going into the 4th section 4 times since 2020. Remember 2020? Yes. This is now the lowest since October 2020. What happened October 2020 here? Well, we'll see. But if you look at these red negative rates, the price of Bitcoin afterwards tends to skyrocket. First time, again, April 2020. Second time, June 2021. Third time, it was around November 2022. And here we are again. We could be entering this stage where things really perk up. So that's why we're looking at this very carefully. Now let's analyze kind of my simple way of viewing the position of where we are in the post-halving cycle, which is so important to Bitcoin. Here, there's a couple of things. It's a very crude chart that I have. I've got the all-time high and the floor. We're pretty much in the middle of the range. But what's interesting, a couple of things. First of all, we are 2/3 the way through today, okay? 18th of July is 90 days after the halving. We are now the 18th, 19th of June, so we're 30 days to go. We're 60 days in, and we are just below the middle of the range. One thing that does concern me, though, is the trend here is about to flip orange, which is bad, negative. So that is concerning, but sometimes that can be short-lived. We will watch this very carefully. The max floor is 21% off the all-time high, which we hit at the end of April. Could we go down there again? I'm not sure, because the short-term holder realized price is heavy. Is high, just under 64K. So I'm not sure what's going to happen, but we are middle of the road, literally, which is an okay place to be. Now let's look at comparative cycles from previous halvings, and let's figure out exactly where we are. Again, we're 60 days after the halving, and people are deeply depressed about the price action. Every cycle is the same thing. But let's break this down. You can see here in this chart, we got the big pink at the top is 2012, then 2016, and the darker green, the lighter green is the year 2000, the C19 time. And then 2024 is the black line that just began. If we look at how long we stayed down after the halving, the 2012 cycle was 50 days, 2020 cycle is about 65 days, and the 2016 cycle about 90 days, give or take, before we started really going up in earnest, making kind of new highs, etc. So the question is, what will happen this time? I believe we could start seeing things happen in the middle of July onwards towards September timeframe. Not saying it's going to be the same as last time, but it will be interesting to watch. Now, the other key support level I touched on yesterday, but I'm going to share it again because it's so important. The critical short-term holder realized price is $63,823. Yesterday, we hit $64,020. And by the way, the ETFs are dumping hard. And like I covered on Saturday's Bitcoin video, we don't need, no, if you remember that one, the Pink Floyd iteration. This support level is so important, and we haven't breached it, which is a good sign. So again, we got close, but we're still not under it. And the price now, as we speak, is 65,000. So we're hanging in there. But again, there's a lot of unwind happening. And the good news I take from this is, despite the big unwind of nearly $1 billion in 6 or 7 days from the ETFs, the price has been relatively stable. It hasn't completely tanked. Now, let's talk about the sideways chop. This is from Checkmatey, and he talks about kind of when analyzing markets, check out these higher lows. The higher lows are very important. The orange little circles, and we are still making higher lows. And this is, Checkmatey says, when he is analyzing markets, he's found it extremely useful to practice holding different competing ideas at the same time. Yes, we do have maybe a lower high, but we also have a higher low. So the way I interpret this is we're getting that compression I discussed yesterday too. Eventually, something will break out. The question is which direction. And this leads me to my next point. What's happening next? We've got to look at the macro a little bit. This is the liquidity is coming in 10 days per TED Talks Macro. And I went and checked that because I wanted to find out what's going on. Well, the reverse repo added 60 billion last week. And the Treasury General Account is likely to add another 200 billion over the next 2 weeks, with a combination of UST auction settlement and the June corporate tax payment, which is why we're positioned to be patient. Things will get the market will get a lot more liquidity in the coming 10 days. And also what TED Talks Macro talks about is the correlation between Bitcoin and Fed liquidity never ceases to amaze. Liquidity bottoms in the coming 10 days and then rips higher again. So get ready, everybody. This could be very positive. And for those Dixie fans who believe a strong Dixie is bad for Bitcoin, well, there is that correlation. Now, I've analyzed this before, Dixie Bitcoin correlation. It works maybe 60% of the time, 40% of the time it doesn't. But the point is, here we are getting rejected off the range high at around 106, which is good. So we're heading down to mid-range. When the Dixie goes high, Bitcoin, 60% of the time, falls. However, perhaps with all the stuff we're seeing going on right now, this could be another tailwind for the space. So let me summarize my thoughts. Just a guy on the internet, and hope you like this content and these ideas. So conclusion, I believe we should still be a little bit bullish because there's too many tailwinds. One, hedge funds are unwinding the carry trade because they see funding rates heading down. So it's no longer lucrative for them to hold the carry trade. And that means when they unwind it, it'll kind of, I believe, take the lid off the Bitcoin price action. Okay. Having that carry trade on keeps the lid on the price, I believe. Some people argue that's not true. I think it's partially true. Also, liquidity is incoming. The dollar index was rejected off the high, and we have this post-halving seasonality. We got to get to 90 days after the halving to see exactly where we go to next. So hope you enjoy the Bitcoin Daily Show. I'll be back in 3 hours with Hansi Nelson, Søren Basher, and of course Herbert Ong. We're going to model out the Tesla master plan. This is going to be fun. This is going to be crazy to see. As you know, I've got some theories. We've seen what AI can do. We got two big revolutions happening at the same time. One is crypto, and the other one is AI. Where do you want to be? Check it out for later. And thank you all for coming. I hope you like the show. Thank you to mods in chat. And back to work. See ya.